Sometimes the business world just doesn't make any sense. A company loses a huge antitrust lawsuit, and its stock soars? It sounds totally backward, right? Well, that is exactly what happened with Alphabet. So let's unpack how a major legal defeat actually turned into a massive win for investors.
Okay, and just a quick reminder before we dive in, this isn't financial advice. It's for informational purposes only. So please, always do your own research before making any investment decisions. So the moment the verdict dropped, what happened to Alphabet stock? Did it crash? Nope. It jumped a whopping 7.5% to a brand new all-time high. I mean, that is the exact opposite of what pretty much everyone was expecting.
Which brings us to the big question. How on earth does losing a landmark antitrust case send your stock price straight through the roof? Well, the answer isn't in the big headline, it's buried in the fine print of the judge's decision.
First things first, we've got to decode the ruling itself. You see, the market didn't react to the headline. It reacted to a really crucial detail that made this whole thing way more nuanced than just a simple win or loss.
Okay, here's the key distinction, right here. The judge banned Alphabet from signing exclusive search agreements. That was the big loss everyone reported. But, and this is a huge but, the ruling still allows the company to pay for placement and, crucially, to enter into non-exclusive contracts. That one little word, non-exclusive, changed the entire game.
So why was that little word so incredibly important? Well, because it basically gave a green light to Alphabet's single most important partnership, a deal that's pretty much a multi-billion-dollar handshake.
And we're talking about $20 billion. That's what Alphabet's deal with Apple is estimated to be worth, just to be the default search engine on iPhones. It is a staggering amount of money, and investors were absolutely terrified that this entire deal was about to go up in smoke.
That $20 billion deal? It feeds right into Alphabet's most profitable area, its high-margin services. It's the engine that powers the company's biggest cash cow. So, by allowing these non-exclusive deals to continue, the court basically removed the single biggest threat to that revenue stream. For investors, this wasn't a loss. It was a massive collective sigh of relief. All right, so with that huge financial threat off the table, how did investors play it? Let's take a look at the playbook that started taking shape on the trading floor. Now, technically speaking, the stock is running pretty hot. An indicator called the RSI is in what's called overbought territory, which can sometimes mean a pullback is coming. But the thinking here is that when a rally is this strong, a stock can actually stay overbought for a long, long time. The positive momentum is just that powerful. And this is exactly why the strategy that emerged isn't to sell, but to look at Alphabet as a long-term hold. With its core business model basically getting a stamp of approval from the court, the fundamental outlook is just seen as being too strong to worry about any short-term jitters. So this all leads to a pretty clear strategic path. For anyone who's already invested, the next price target being talked about is around $245. And for those of you thinking about getting in, the advice is to be patient. Maybe wait for a general market pullback instead of chasing the stock at its all-time high. Which kind of leaves us with this final big question. The antitrust case was seen as one of the single biggest threats to Alphabet's dominance. And with that threat now, mostly taken care of and its most important partnership safe, you just have to wonder, is the company basically unstoppable now? Definitely something to think about. And that's it for this explainer. If you found this breakdown helpful, hitting that like button and subscribing really helps us make more of them. Thanks for tuning in.